Hi dear traders, today is Tuesday, January 11th, and I'm happy to present to you my fresh market review prepared for InstaForex. What's going on in global financial markets? Canada aims to pump up oil production rates by 18% and at the same time slashes carbon emission by 40–45%. This is a simple task to solve for developed economies. A fall in the US stock market is an excellent opportunity to earn nice money. I would advise you to buy the Nasdaq. Those who bought it yesterday have already won. Bitcoin slumped yesterday below the level of 40,000. I myself opened some long positions on Bitcoin at the level slightly below 40,000. Now let's discuss my ideas on charts. As usual, we are beginning with gold. I want to show you the impulse triggered by the pin bar which emerged on the daily chart following the US non-farm payrolls. From 61% retracement, this pin bar hit 161% Fibonacci level. Yesterday was an exciting day for the gold market. The price jumped to 161% Fibonacci level from the impulse after the non-farm payrolls. I don't have any trading ideas for gold for a while. Today is a crucial day for the US dollar because Jerome Powell is due to testify at the Senate. As for gold, the situation is tricky. On the one hand, there is a good impulse and a clear retracement, but there are proper targets. On the other hand, the price made a fake breakout. Traders gave priority to the weak employment but not to a decline in the jobless rate. Currently, I'm puzzled about the further trajectory of these trading instruments, so I have no idea. Perhaps traders will push the price to highs, perhaps no. The euro-dollar pair is a riddle for me. Incredible. I'm fed up with these trading instruments. Yesterday, the currency pair came under strong selling pressure. As a result, the price printed lower lows in the European and American session following the non-farm payrolls. However, it didn't break the low of January 6th. I also sold the pair. It closed with a pin bar yesterday suggesting an uptrend. The non-farm payrolls triggered the bullish sentiment. Apparently, the currency pair should escape a trading range upwards. In fact, the euro-dollar pair is hard to trade now because of the flat markets. A few years ago, I used to have a similar situation. The euro-dollar pair got stuck sideways for a long time and I was exhausted. It was 2015. Back then, I applied the Fibonacci grid to the bearish impulse and entered the market with short positions at retracements. That time, I also made a plan for selling after the non-farm payrolls. In practice, the euro surge upwards defined my expectations. The price eventually dropped to the expected target after a longer while in light of the ECB press conference. The price crashed on the same day. The same story is unfolding nowadays. After the non-farm payroll, the instrument should have gone downwards, but is actually moved up. Yesterday confirmed that the pair was poised to climb, but I'm not going to trade the pair higher. I'm angry about the euro. I have other instruments to trade such as indices or cross rates. I'm pessimistic about the euro, so I would rather wait and watch. There are important events ahead. Today, Powell is testifying at the Senate. Tomorrow, the US CPI is due, which is expected to set a fresh record. I don't know how the market will respond, hence, let's leave it. Perhaps the US dollar will strengthen. The pound sterling is also extending its bullish run. It has enough pace to a climb. I have already told you about my crazy bullish plan with the target at 1.45. Who knows, maybe the sterling is set for this high. Meanwhile, the pound-dollar pair is not making a retracement. So we are leaving this instrument. The dollar-yen pair has hit all its targets. The bullish layout is still in progress. It is still uncertain what developments will follow. Let's see how the pair will close the week after the US CPI data and Powell's testimony. I want to check whether it is the ongoing bullish trend or an upward retracement. So that's all for today. Once again, the major events today are a speech of Christine Lagarde and a testimony of Jerome Powell. Let me warn you of higher volatility tonight. Tomorrow we will get to know the US CPI data for December. See you online soon. Bye bye.